All right, everybody. Bryce Paul back again with another little daily update. Crypto Revolution, Crypt Nation, Crypto 101 podcast. You guys know what it is. Big, big, big day in the markets. Guys, this is the most volatile time that we've ever seen. Um, st- you just can't make this shit up. There was 8 days in a row where the Dow Jones was either up or down by 1,000 points. Today is the first time in 8 days that it hasn't been up by 1,000 points or down by 1,000 points. That signals to me that the volatility is starting to get reined in a little bit. We're getting a lot more certainty about what's really afoot here with the coronavirus. What do I mean by that? Well, President Trump announced today that we have a potential cure on the horizon for coronavirus that was coming out of the school of um, the school of doctors that were doing all the malaria research. All the people that have the antivirals against malaria are saying, hey, this same drug is very, 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 very effective against coronavirus. And so President Trump is starting to announce that. People are saying, hey, it looks like there's a cure on the horizon. Of course, we have all these amazing doctors working on the cure, and we're starting to see a lot of progress. So, in tandem with the certainty uh, and the clarity that we're getting towards curing the virus, we're flattening the curve with the lockdown, the stay at home, the quarantines, all that kind of stuff. There's not that much new cases of coronavirus being diagnosed in Italy or in China. In fact, China, we're already starting. I saw a funny report that we're already starting to see the carbon emissions that we measure around China that had dropped drastically since they shut down everything. Now those carbon and nitrogen emissions are starting to skyrocket again. One telltale sign that China is back in action. They are not reporting any new cases, zero new cases of coronavirus in Wuhan, where it all started. So we're seeing a lot of really good news about the fundamental black swan, if you will, that really dropped the economy. So, in tandem with all that, we're seeing that risk is back on. We see Bitcoin climbing 20% today. We saw Dash in the last 24 hours climb about 35%, Tezos about 20%, Cardano, Basic Attention Token. A lot of the coins that are in our portfolio. Again, if you're not tracking our portfolio, you're doing yourself a great disservice. Go to cryptorevolution.com to find out more, or go to crypto101insider.com. You can find out more about what we're up to and how we're trading this market. But risk is back on, clearly. But there's still that's risk that's getting put on in the short term. But in the long term, we still have uncertainty around how all of this chaos is wreaking havoc on the GDP growth. And we saw that Deutsche Bank thinks that quarterly GDP growth is going to be the worst on record since World War II. That's a report straight out of Deutsche Bank. It's not looking good because, again, we had this supply chain backup, and we've talked about that extensively in our private group, Crypto 101 Insider Crypt Nation. We've talked about that extensively, the supply chain halts that are just having this rippling effect that are causing so much damage. So the main risk here is unemployment. LA Times put out a report. They did a poll with everybody in LA. 18% of adults reported that they had been laid off or that their work hours had been cut. 18%. That's a huge, huge, huge number. Again, we don't know the sample size of the poll that was taken. LA Times is a very reputable source. But again, polls are polls. Okay, so today the statistic is that we're about 3.5% unemployment rate at the end of February 2020. But we're already starting to see massive spikes in states that have the unemployment insurance. We're already seeing numbers coming out that are, just for instance, in New Jersey on Monday and Tuesday, we had 15,000 people apply for unemployment benefits on Monday and Tuesday, which is a 12x increase over daily normal levels. In Connecticut, we saw 8,000 applications arrive over the weekend, this past weekend, which is an 8x increase, an eightfold increase. We saw 31,000 Minnesotans apply for unemployment insurance on Monday and Tuesday. That's not good. We had in Ohio 45,000 claims this week already compared to 6,500 last week, which is a 7.5x increase. So what we're seeing is that even though people might start to be saying, okay, stocks are on sale, let's start buying stocks. It's a 50% discount practically on a lot of the cryptos. Oil's cheaper than it's ever been. Oil had its best day ever, right? 20%. Best single day in history oil had. So the market is saying, hey, everything is discounted. Let's maybe start buying up these things and get some liquidity. It might be a dead cat bounce where it gets rallied, and then the trend continues down. That's a very real risk. But what we're seeing is that long tail effect of unemployment, where now we have, like we're talking about, right? Um, Small businesses can't really get loans because there's a liquidity crunch. Why are we having this liquidity crunch? Again, tax liabilities and debts are only payable, are only serviceable in the US dollar, right? Or in a sovereign fiat currency that somebody has. So people are selling everything in order to service their debts when they don't know on the horizon how much cash flow they're going to be getting in. The other thing that I've been thinking about a lot is you have all of these hedge funds which have money that they're managing, but it's the money of partners and basically investors into that hedge fund. So if I'm a billionaire, I'm not trading my own book. I'm saying, hey, I'm going to give a hedge fund my money. I'll give them 2% management fee or whatever. And, you know, I will trust them to make money for me with my money. But there's this thing called redemptions. And so redemptions, when I'm saying, okay, I got my, I want my money back out of the hedge fund, what do they have to give me? They have to give me cash. So hedge funds are seeing all-time highs of redemptions. Basically, people saying, hey, take my money out of the market, just put me in cash. I'll take the last 2 years of good gains. I'm going to put it in cash and save it until things blow over. So we're seeing really high rates of redemptions, which are payable in cash. So hedge funds are forced to liquidate positions so that they can pay out in cash. But basically, right now we've got back to the unemployment stats, which are just so important to think about. In the Great Depression, unemployment didn't peak until 3 years after the Great Depression started. So in that sense, I have some numbers here on the screen that I'm reading. In 1929, we had unemployment rate of 3.1%. That was 1929, right? First year of the Great Depression. In 1930, and right now it's pretty similar levels, right? In 1930, only 1 year later, 8.7%. So that's more than a double in increase. By 1931, you have another approximately double. 1931, you have 15.9% unemployment. By 1932, you're in the heart of the Great Depression. You get 23.6% unemployment. And finally, by 1933, you have 25% unemployment rate. And then it starts to trickle down slowly and slowly after that. But you can see it took 3 years for us to get to double-digit unemployment and 4 years to get to all-time high. So hopefully the government hopefully we don't get there. The way that we're not going to get there is the government stimulating the economy, right? We talked about in yesterday's video this idea that we're going to continue to debase the monetary currency. We're going to bring interest rates to zero. We also today, for the first time in history, we saw the 6-month Treasury bill go negative by 2 basis points, which means that it's about negative 0.02% yield on holding a Treasury bond, which is unprecedented, right? We've never in America seen a negative rate on bonds. So that's really big to pay attention to. And it just signals the weakening of the dollar, and the economy is trying, or the government is trying to stimulate the economy by incentivizing more spending. How do you incentivize spending? By weakening the dollar. The whole idea of the dollar is that you hold it, and today it's worth more than it's going to be tomorrow, right? So it's hot potato. You want to get rid of it. You want to spend. You want to keep the money going in the system. It's like the blood, right? And again, this is all the stuff that we talk about in Crypt Nation. Go to crypto101insider.com to learn more about how we're trading this entire environment, and how everybody on our side of the trade is going to avoid unemployment, hopefully. But right, so Secretary of Treasury Steven Mnuchin says if we don't get this stimulus package passed, 20% of America could be unemployed. That would be tragic, right? That's about 1 in 5 people unemployed, and that would not be good. So, moving on, we just have a great rally here in the crypto markets. Again, Bitcoin is up off of its lows, showing massive, massive momentum. Um, Again, that sell off that we had last Thursday, there's just never been anything that I've seen. I've been in the industry for several years. I've never seen a sell off like that. It was greater velocity and greater force than the sell-off we had in 2018 and towards the end of 2019, towards the end of 2017 when we had the peak 20,000 back down to 10,000. This felt so much more dramatic than that because it truly felt like, hey, this could be the end. This is the make it or break it moment. I mean, Bitcoin was born in the darkness and in the depths of the darkness of the heart of the global financial crisis in 2008 and 2009, and it's never experienced another one of those financial crises until today, until this last month, right? So it's make it or break it for Bitcoin. It's make it or break it for crypto. This is the value proposition, right? A global decentralized hard cap supply, immutable store of value that can never be confiscated through inflation or through low interest rates. You can't weaken the Bitcoin uh, value proposition by diluting it and all that kind of stuff. The reason why Bitcoin's dropping is because, again, it's this risk off asset where everybody's trying to suck up all the cash because we're in the liquidity crisis for the tax reasons, the redemption reasons, as well as the servicing of the debts. I'm sorry. So anyhow, so BTC, Bitcoin, crypto, it's immune. It's really, it should be, the variables are so different. It should be immune to the bad earnings reports. It should be immune to, sovereign debts defaulting. It should be immune to, the supply chain choke and all that stuff because it's not necessarily the same. It has different, it shouldn't be responding to those things, and we're starting to see that it's not responding to those variables. It's only responding to correlations in price. When stocks go up and when oil goes up, then crypto will go up. But in the last couple of days, it's been going up regardless of if or not those things have been going up. So we're starting to see a decoupling in the correlations between Bitcoin um, and all the other risk on assets. So kind of at the end of the day, I mean, businesses in life, everything's going to go on. It's going to be hard. Credit is going to get tighter. It's going to be harder to get loans as a small business in the long term, right? Because right now, excuse me, we're going to have to expand everything, expand the monetary base, expand the balance sheets, all that stuff. But in the short term, they're going to try and stimulate the economy and give money away. Again, everybody, if this whole thing passes this week or next week, the economic stimulus bill, everybody's going to get $2,000. It's like unbelievable. But in the long run, you're going to have to pay the piper, right? Somebody has to foot those bills. It's going to be resultant in tax hikes or whatever. Um, Again, you know, business and life is going to go on. We're going to come out of this quarantine. The immune system of America, both physically, like our immune systems of our bodies will be stronger, but the immune system of society is going to be stronger as well. We're going to come together. We're going to beat this thing. We're going to come out stronger. It's like a war, right? You go in, you lose lives, you take a lot of economic damage, and it's devastating, but you come out with new regulations and expedited government bureaucratic processes, and you free up capital to make new investments, and there's all sorts of really good things. It's the cycle of life. It's destruction and creation, and destruction and creation, and destruction and creation. It's the cycle of life. It's how things work. It's binary. That's what it is. And so, you know, life's going to go on. Stocks are going to go up. Crypto's going to go up. Oil's going to go back up. We're going to get bond yields that continue to stay low. Again, the cure is working, and it's all going to be okay. So, guys, this is just a quick report, quick update on what I'm seeing in the market. Again, one of the coins that we really like is a small cap coin called Ocean Protocol. It's available only on Bittrex. We put out a report this Tuesday. It's already up about 50% from the lows that we spotted. Again, some of the coins in our portfolio, like Basic Attention Token, Binance Coin, Several others, they're all up about 20% today. So if you want to learn more, go to crypto101insider.com. You can check out cryptorevolution.com, and you can join us, track our portfolio for only $1, and learn how to trade like how we're trading the markets. And so anyhow, we're going to come to you guys every day, let you guys know what's going on with the markets, and I hope you guys enjoyed.